Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Neil Roberts, who's the CEO of peer-to-peer lender Harmoney. Welcome in, Neil. Good to see you again.
Thank you very much.
Now, look, you've had a really busy time, obviously, since the business launched last year. In January, you announced a deal with TradeMe, whereby TradeMe took a 15% stake in Harmoney. Obviously, you're promoting Harmoney through TradeMe. What's sort of the key benefits from that deal for Harmoney?
Well, I think first and foremost, it's the endorsement, Gareth, for a company as young as ours. So it's the brand. TradeMe's a top 10 trusted brand in New Zealand. So obviously they don't make an investment like that without having a good look at the business and the team. So number one's the endorsement. Number two would be they're good mentors. They really are. They've certainly, when it comes to the internet and it comes to platforms in New Zealand, they are the best, the premier, and then finally, obviously, we needed to raise cash in order to execute our plan, and so they were a great help in doing that. And then the exciting thing is our opportunities to work on products in the future. So we're just starting that journey right now. And similar to a Google working with a lending club, just a smaller version.
Obviously, it sort of begged the question too that perhaps they might want to increase their stake in the future or even take control of Harmoney. Any suggestions of that at this point?
Oh, look, I mean, you'd have to ask TradeMe and their board, really, Gareth, but no. So we were busy enough putting the deal as it was together and getting that done. Yeah.
And you've also announced that you're moving into Australia. You've appointed someone over there to run that for you.
Yep.
How far away are you from launching in Australia, I guess, in terms of the regulatory processes and everything you have to go through?
Well, the regulatory process over in Australia is quite long. It's as much as we figure about 6 months, and we're probably 2 to 3 months into that. So. So somewhere around the three to four months, depending on ASIC and how kind they are. So yes, very exciting. We've only got a small team, but a dedicated team over in Australia, just doing the license application and building up, just as we did here. Building up the business plan and working through the systems and everything else. So it's very exciting. It's very competitive over in Australia. Compared to here currently, but it's a massive market and one in which we really do want to play. So, yeah. Yeah,
look, it seems, I guess looking in from outside, quite early to be going into Australia, given that you're still quite new in New Zealand. But is it a case of, it's a new industry and you want to get in early?
Absolutely. So there are some well-established peer-to-peer platforms over there, not in terms of volume or in terms of penetration of the market, but in terms of the longevity. The market is heating up. There is growth, and coming from a small country, and even if we're very good here, we're always vulnerable to an Australian larger business actually coming in here and competing. So yes, the plan was always to get into Australia as well, and eventually, hopefully, we can have Kiwis investing in Australian loans as well in time, and vice versa. So a real, an open market between the two countries.
Now, obviously, you've attracted a lot of money from institutional funders. Heartland, obviously, one, the Blue Elephant group from New York, as well as another. How are you going on the retail side in terms of, I guess, the investment you're attracting in?
Well, retail's, that's the soul of the company. It really is, the peer-to-peer aspect. Obviously, we did get some institutional money, but that really helps retail investors. And it helps because you can get loans going through the market quicker. Therefore, you don't have a cash drag and you don't have borrowers waiting around for money. So very much a tool, I suppose, to help build the marketplace, because it's notoriously hard to actually get the balance right. So we've seen fantastic support from retail investors, we really have. So right now they're over 20% of our funding and growing rapidly as a percentage of our actual funding of the book. And every month, which is the key thing I look at, every month the same investor group has put in 20% growth month on month, every month since we've gone live. So people are obviously enjoying the experience, and yes, it's going very well on that front.
And what sort of people are your investors? Is there a typical one or a wide variety of people?
A big surprise is a spike in the early 20s to early 30s. Quite an interesting set of stats actually. On the borrower side, we're predominantly homeowners, so there's people actually lending, borrowing money. And on the lender side, we have an unusual spike of young people that are actually saving for a deposit. And obviously trying to keep up with the Auckland market and the house prices, and enjoying the attraction of a higher interest rate.
So these are people who see investing money through Harmoney as a way to help them raise a deposit for a house.
Absolutely, and to stay in tack with the market, which has obviously had a lot of heat in it. So, yeah, it's quite interesting.
That's interesting. And what would be the sort of average size of investment that you're attracting?
The average size of investment is around $5,000 at the moment, but we go right the way up to 350,000. And that's an individual. And that's invested as well, so there's quite a lot of work getting 350,000 into the marketplace. But all the range in between. Yeah.
And obviously, on both sides of the book, you have a variety of interest rates. On the investor side, what would be a sort of average?
Look, the index of the whole thing is coming in as we expected it. So we talk publicly about rates of 12%. There is actually, the math comes out somewhat higher, but we err on the side of caution. But the average investment is probably after all costs, including predicted losses, around the 15-16% mark. And our losses are 0.01% of our book. Literally running very well at this stage.
How much money have you lent so far?
$30 million, and growing. So, and we have, these are big markets, as you know, Gareth. If you take the automobile industry worldwide, if you take the air industry, if the travel industry worldwide, times it by 2, it'll give you an idea how big consumer finance is. So, we expected, and you need some scale in order to be able to run an efficient marketplace. So, some people view 30 million as quite a lot. We, have always had in the plan that 100 million in the first year is the right thing to do, but to get that scale and start building a vibrant marketplace, and we're well on track to do that. Very, very, very pleased with the first few months.
And in terms of the borrowers, you mentioned a lot of homeowners among the borrowers. Can you give us a bit of a flavour of the typical sort of age and other sort of factors around some of the borrowers?
Absolutely. So average age is 43, slight skew towards male, obviously working, above average income, it's kind of middle New Zealand, I suppose, is the best way to describe it. We have, it's not something we're proud of, but our approval rates aren't that high.
Where would you put them now?
Still around that 20% mark.
Okay, so that means of say 100 loan applications, you'd approve about 20.
That would be about right. Yeah, okay. Absolutely. So yes, I mean we will continuously work on that, but we've been conservative, I suppose, to begin, and it's worked. It's good sitting here and knowing that we're well behind in any sort of delinquency than we expected. So the book's running just as it should be. And
what about the sort of, I guess, the average loan size? And I mean, is debt consolidation still a key driver, or what other areas are you lending money into?
Yeah, so predominantly debt consolidation, mainly credit card debt. So changing, the revolving credit minimum payment that some people find very difficult to get out of, that sort of cycle, changing that into a fixed term product. So, and the other things are, what we expected, buying cars, the odd holiday here and there, life events, babies and weddings, and that sort of thing. So just a really standard, set of purposes for a personal loan product.
Yep. And in terms of interest rates, I mean, there's a broad range, obviously, but
yes,
an average, or?
Yeah, we're around 17-18%, which is where we pitched it, but we go right the way down to 9.9 and right the way up to 39.99. And the way we come about that's just a risk-weighted average. Obviously, we don't take interest income at all. That all goes to to the landowners in a peer-to-peer environment.
And off the top of my head, am I right in thinking the loan terms are sort of 3 to 5 years, is that?
Yeah, so loan terms are 3 to 5 years. We expect the average to be about 27, 28 months from experience, and you can pay off whenever you like with no penalty. So, really you pick your own term. You can pay as much, can't pay as little, but you can pay as much as you like, often as quick as you like.
Now, obviously, you're still the only licensed peer-to-peer lender in New Zealand, but the Financial Markets Authority is looking at 3 more applications. What's it going to mean to Harmoney when, presumably at some point, somebody else or several other companies ultimately get licences?
Yeah, it's somewhat of a surprise that we are the only licensed peer-to-peer platform, we never expected to be. We expected competition. As I said, the markets are really quite large, and we think that it's a great value proposition for people. So we expect competition, and it's the only way you're going to get a large, vibrant peer-to-peer community, which is really what we want. If we were the only ones, I think we'd severely restrict the market. So we look forward to it. We just hope that people, the right people get the licences and they set about the daily tests in a professional manner. That's really all we ask for.
Now, obviously, you've got Heartland Bank as a shareholder and funder through your platform. What's been the reaction you've got from the other banks in New Zealand so far?
The other banks have been interested. I think that's very much a watch and see. Certainly, the conversation. We've had conversations with lots of different financial institutions in New Zealand and abroad, and it's been one of in the beginning probably educational, and I think that the banks are actually interested and intrigued to see how peer-to-peer lending will go, and I have no doubt that at some point in the future they'll want to be involved in some way. Yeah.
And you've obviously attracted quite a bit of institutional funding. I think it was 4 that put in 100 million when you launched. Yeah. Any more that have come forward or in the wings at this point?
Look, we're constantly talking to funders. We have some products in mind that we want to launch later this year. We've obviously got to be able to, or want to be able to fund Australia in a similar fashion to what we did here in New Zealand. What's
the scale going to be like there compared to here? I mean, is it going to be in terms of your funding scale?
Funding scale?
Over there. Bigger?
Yeah, I think it needs to be. It's about 5 times bigger. They have some colossal amount of consumer non-housing debt, something like 98 billion, I think. We do expect it to be a large market for us, absolutely, and therefore, we're working with a few international peer-to-peer funders to see what we might be able to do for Australia.
Okay, and you've talked about new products that you're going to launch down the line. You've made no secret of the fact that you're really keen to get into the SME market.
Yes.
Can you tell us any more about that and when that might happen?
Yeah, look, we've taken a view in terms of the SME market that we know of several competitors that will be hitting these shores and also Australia. And so I think the likes of OnDeck, PayPal have made no secret of the fact they're coming in. So we've taken a little bit of a step back just to try and survey the market properly again on SME. So if anything, we'll probably push that back. We're aware of a couple of other platforms as well that could get involved. So we just want to make sure that if we're any market in which we go to, we just want to make sure we add value and that we come out with a compelling product. And SME, without a doubt, we will be in the SME space at some point. Perhaps more pertinent to us right now is we're looking long and hard at mortgages right now and the potential of peer-to-peer mortgages. And if we were to do it, it'd be some time off, but we're certainly getting excited by a few concepts there.
Is that an area that the US is sort of the most advanced peer-to-peer market? Are they doing mortgage lending there?
And the UK.
In the UK,
Yes, so yes, they're just starting. So there's a startup which is a breakaway from Lending Club called Lending Home. And then there's a plethora of various investment property type peer-to-peer platforms, and Sophie, I think it is, moving into mortgages as well. So yeah, absolutely, there's definitely a lot of interest there. It is obviously a very different proposition to a personal loan, but it does offer it does offer attraction within itself. So we're working on that and a number of other things that are thoughts at this point, and just seeing what can we do, what does our community want, what might they respond to, investors and borrowers, and go from there. But yes, certainly we're excited, and there's no shortage of product opportunities for us to do over the next 6 to 12 months.
Absolutely. Just in terms of mortgages, I mean, are you looking at the same sort of model that you're operating now? So you'd fractionalise the loans, that type of thing?
Yeah, we're actually looking at, with a mortgage, you get the opportunity to have subordinated debt. So you can actually fractionalise a single mortgage and take proportions that are risk weighted. So that's an interesting concept, and one that might provide, down the higher LVR, might provide for a better return for investors, and they might, obviously like to take that type of credit or that type of risk on. So, yes, some very interesting opportunities there for sure. And
would the loans be sort of across loan to value ratios, or would you?
Oh yeah, it's early days for us right now, Gareth. Yeah, but.
And you thought about, securities another one, whether you'd have securitized?
I'm talking about first, securities. Yeah, so it would be a first mortgage.
Okay.
Yeah, in that scenario. We're about to increase personal loan size at the upper end. Now we've got the book on board, and things are, absolutely, our prices are bedded down, and the book is running very, very well. There's certainly demand at the upper end for a secured by residential property personal loan. So we'll have that out in the marketplace within the next few weeks as a small enhancement. And as I say, our current borrowers are predominantly homeowners actually, and 43 years old, and really is a prime book.
It's very interesting. Well, look, thanks a lot for your time, Neil.
Thanks,
it's great to have you in and catch up on how things are going.
Okay,
and that's Neil Roberts, the CEO of Harmoney, and I'm Gareth Vaughan at interest.co.nz.